Welcome to another module from our brand new price action course, including our indicators. Guys, today it is time to talk about the hanging man. Let's go to our agenda, and it is always the same, right? Please watch also the other lessons. Very important to know to understand the other price action modules. Okay, means a hammer candle, the bullish engulfing, and so on. Here it is time to cover another bearish price action candle, and here it is a hanging man. We will talk about the theory here, the definitions, the key takeaways, and then also how to trade. Right, we have here the same three different options to trade this candle. And in lesson number 2, we will go into the chart for a practical application. Let's go here to the definition. A hanging man is a candle with a long lower wick, little or no upper wick, and a small body near the high of the day. Guys, if you watched already the module 1, the hammer candle, it looks like like a hammer candle. Let's go right here, and the hanging man and the hammer candlesticks look identical. The only difference is the context. Here it is a position. The hammer candle is a bottoming pattern. Remember, guys, on the module 1, this is a bullish reversal, right? The hammer candle is a bullish reversal. And look, we're here in a bearish reversal topic here. Means the hammer candle is in the lows. You want to buy the hammer candle. But the hanging man occurs at the tops. Okay, it's a bearish reversal. Means that's the only difference right here from the structure. The hammer candle is a bottoming pattern, and the hanging man occurs at the tops. And of course, the hammer candle is a bullish reversal, and the hanging man is a bearish reversal. The candle must have a small body near the top and a long lower wick that is at least twice the size as a body. There's little or no upper wick. Okay, means here a small body. It is not super small, but okay, it's small at the top. We have a long lower wick. Look at this, and a small wick on the top. That's fine. And the open is also clear open here in the highs. Number 2, the close of the hanging man can be above or below the open. It just needs to be near the open so the body is small. Means here also a green candle, a green body is fine, a red body is also fine. It's not a difference. It's not one is better than one. Okay, that's absolutely fine. Here important is it just needs to be near the open so the body is small. That's important. Number 3, the candle represents a large sell-off. Yeah, I put this always in the definition slide to understand why we want to go short here, why we want to go long, why it's a bearish reversal, why we expect more weakness. Okay, and the definition is here: the candle represents a large sell-off after the open. Okay, a sell-off after the open. That's the reason why we got this wick here to the downside. After the open, which sends the price plunging, but then buyers push the price back up, means that's the reason why we have this wick here to the downside and not a close. Okay, means first a sell-off, and then the buyers comes back and push the price back up here to the tops. Again, but then buyers push the price back up to near the opening price. Traders view a hanging man as a sign that the bulls are beginning to lose control and that the asset will soon show more weakness. Okay, Means here, okay, we got the sell-off here. Okay, then the buyers put more money inside and they want to cover the pressure from the downside. But yeah, it was the first time of weakness, and maybe we will see it was the beginning of the weakness, and maybe you will see soon more weakness. That's the idea behind the hanging man. Let's go to the key takeaways for the hanging man. The position, guys, it is a bearish reversal, means typical occur on the price top, should be on the higher high or the lower high. Okay, means here look to in a downtrend, we need this in the high or lower high area to short this hanging man again, and in an uptrend we need this in the higher high area or in the high area to short this one. The wick. The wicket is the same here, like the hammer candle, or also the shooting star, right? The wick. The lower wick should be at least 2 times the height of the real body. Means this is the body is a range of 1, okay, and we need minimum the 2 times of this, or to the downside. Look, with more and more and more and more here. Number 3 is structure. The close can be above or below the opening price. Also, the close should be near the open for the real body of the candlestick to remain small. Again, guys, red or green body is fine. Important is that we will close here at the tops. And then, of course, sell action. It is a bearish reversal and you want to sell the hanging man. We'll talk about the selling opportunities in a second. Let's go to the indicators, and very clear, we'll use this then also for the practical application. No, only very quick. Seasonality, guys, it is a bearish reversal. Of course, we need current price located in a selling point, right? It will be the best. We don't need all of this in line, but yeah, it will be better maybe. Valuation, specific valuation asset or assets located in the bearish area to short our asset. The COT of this, if the COT is the future, then we can use the COT information. Commercials should be in the bearish area or better in the extremes area, bearish area. And of course, a trading day of the month, bearish trading day, at best a cluster of several days to stay in this trade to increase your profit margin. That's the idea. It was the key takeaways for the hanging man and also key takeaways for the indicator for this bearish reversal. Let's go into the next topic, how to trade this hanging man. Here we have 3 different options. Option number 1 is the short below. Means we are here in an uptrend, low, high, higher, low, higher, high, right? We are in the higher high, back to the position, to key takeaways position, higher high is fine. Great. We created a hanging man. Great. And the idea is short below. How we will do this. First, hanging man key takeaways must be met. Okay, position, we are in the higher high, fine. The wick, we need 2 times the height of the real body to the downside. Let's check. Yes, definitely, right? Definitely. It's 1, 2, easy to get 2. Number 3 is the structure, green or red body. Important is that we close on the top. Also green candle, and we are close to the high here. Fine. And last but not least, I guess it's only 3. Number 2, okay, hanging man, the key takeaway is met. Number 2, as soon as the hanging man is completed in its respective time frame, here it is weekly, means we can, we mark the hanging man high and the low. Means, okay, wait for Monday, because it's a weekly time frame. On Monday, we will start with another candle. It means, okay, we can use the high and the low here. Number 3, the entry short below, right? That's a short order, is set slightly lower than the low to avoid possible fake outs. Means it's our high, this is our low, and our short is a little bit, our entry is a little bit lower, right? For example, here, our low would be at 108. then our short would be at 107,980, for example. Okay. And then, yeah, to avoid fake outs, right? Always it's the same, guys. We move this entry a little bit lower, always, because sometimes we get a fade out, a test of the load, and then we see a rally again. Here it's definitely better to move your entry always a little bit lower. If come the pressure, right? Because it will be powerful, then you're definitely filled. Number 4, stop loss is set with a respective distance, for example, plus 33% above the high. Means here, this is your entry, stop loss above the high, plus 33% is a recommendation for the blueprint recommendation. End of the day, of course, it is up to you. Reward is less. Of course, it is, or not of course, it could be less, right? Because it depends on the size of the hanging man candle. Most of the time, the hanging man is yeah, big maybe, right? And definitely not so small like option number 2 or 3. Means it's a high. The zone is big. That means also if your zone is big, then of course your profit margin is small. Trigger probability is the best because if you move lower the low, then we are filled, right? Perfect. And protection, you have your stop loss above this area, one of the best. Let's go into option number 2. Option number 2 is short within the range. Number 1 and number 2 is always the same. Hanging man key takeaways must be met. It is the same sample like option number 1, and it will also the same sample like option number 3. Point 2, as soon as the hanging man is completed in its respective time frame, we mark the hanging man high and the low, high and the low. Perfect. Number 3, the entry or short order can be made market or as a set within the entire range of the hanging man. That means here, okay, look at this. It is a hanging man. And for example, right, that's option number 1 is short below. If we open in the same area we are closed on the previous week, that's here, okay, then it's possible to be to market short here, right? At the opening, stop loss here above, and then enjoy. You have a super small zone, only this one here. Of course, you can also wait, right? That you move lower, for example, around the 50%, and then press the market button. Fine. You can also set a pending order, right? For example, here, if we are in the last part here, if you're dropping here, and then you will set a pending short order, also fine, up to you. Of course, here stop loss will be always 33% above the high here. And reward could be definitely better here again, right? If you enter on the end and the close, the previous weekly close here, you have a super small zone, right? This will be a zone, and this is the origin zone. That's crazy. You'll increase your profit margin. Trigger probability is sometimes a little bit, maybe you'll be not triggered. For example, if you move your entry above here, for example, okay, in this area, close to the distal line, close to the high, but we will never arrive to this area. We will see, that was so close, we will open next week, Monday, and you will see only a drop. Means we will never filled, for example. Possible. And protection is still the best, plus 33% above this area here. It is a recommendation. Fine. That's option number 2. Let's go to option number 3, and it's always a little bit tricky. Same sample here, and short within a lower time frame zone. Of course, a supply zone. 1 and 2 is always the same. Hanging man key takeaways must be met. It's the same sample, guys. It's same candle. As soon as the hanging man is completed in its respective time frame, we mark the hanging man high and the low. Here's the low. Here's the high, right? Number 3, the entry short order can be made market or as a set within entire lower time frame supply zone of the hanging man. Means this is weekly. Okay, we created this weekly hanging man here. Then we want to look, we want to check this candle on lower time frames. Means, for example, daily, 240 minutes and so on. And we found something like this. It's a rally here, right? Green candles, indecisive candle, indecisive, 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 and then a drop. Means this could be high quality supply for you. Okay, means we can short this one here. Okay, means look at this. Around your entry is around the weekly candle. Okay, is around 110 is a distal. 110 is a distal right here. This is perfect. The entry is 108, option number 1 around. And look, your entry will be the same, maybe 108, but your stop loss will be 108. 800 and not 110, for example. Okay, means will get definitely a better zone, or not a better zone, a smaller zone. And then, yeah, you can trade this one. And we see nice leg outs here, for example. Okay, then we come back, we hit this the supply zone here. Okay, then short this one on a proximal line, and of course preferred or wider, up to you. And then you're filled. Again, guys, we expect another drop, right? That we see a leg in, indecisive base candles, and then a leg out. We created a supply zone, and then, for example, we'll drop to 107.400, and then maybe we come back to your zone. We have filled this area here. You filled the supply zone. You filled more unfilled selling orders, and then you will see another drop. The entry will be your lower time frame proximal line on wider or preferred, up to you. Number 4, stop loss, and we have 2 options for our stop loss. Number 1, stop loss is set with a respective distance plus 33% above the high. Okay, means here you can use this as your entry, 108, and then a stop loss here above the weekly hanging man candle, or above the lower time frame high. That means you will go into the lower time frame here for your entry and also for your stop loss. Means move your stop loss 33% below above your distal line of your lower time frame supply zone. Reward is better, right? Could be definitely amazing, right? It could be that you refine the zone. Again, guys, here your initial zone is around 108 to 110, right? And your lower time frame zone is entry from 108 only to 108.800. Okay, completely different. Here your distal line is 111. Means you'll increase your profit margin. Trigger probability is in the middle, right? We don't know. Maybe we will see a drop and you will never come back. Possible, right? If we come back, then we increase your profit margin. Protection with a higher time frame protection is one of the best. The lower time frame stop loss protection means that you move your stop loss above the lower time frame zone here, guys. It's a little bit tricky. Possible, right, that we will break this area because the whole hanging man above is a 110 area, right? It's 110, and here your stop loss is only a little bit, yeah, close to the lower than the 108. Possible, but it's always the same. A game between risk and reward. Okay, that's it, guys. Please check your notes. You can download your notes here. I will add this for the hanging man also. I will add the hanging man key takeaways here, the indicator key takeaways, and of course option number 1, option number 2, and option number 3 in the notes folder. Next lesson is the practical application.